It's an interesting company to research. It's not one of our customers, but certainly everybody's familiar with Disney. It's kind of like we've probably all been to one of their parks or seen one of their movies or listened to one or watched one of their news shows or whatever. There's just an amazing company. They own 200 different companies as well. And so we're gonna get started. We're gonna start off with a couple of questions. This is going to be one of our questions, but the first question is actually, have you ever attended one of our classes before? Are you a graduate of one of Acumen Learning's classes? Yes, I attended a program, I attended a session. Let me know, have you ever attended one of our classes before? We teach, as Bailey said, we teach business acumen courses, and a lot of people, actually, the people who have attended those classes are the ones who get the invitation to these earnings calls, but we encourage others to attend as well. So have you ever attended? We call it Building Business Acumen. We've actually got a new platform out, Applying Business Acumen, which is kind of like Building Business Acumen 2.0, if you will. So getting lots of responses. Let me close the poll, give it a chance to count down and get those votes tabulated there. Give it just a second. We've got about 14 seconds to go. It's amazing how a few votes can tie this thing up just a little bit. I can kind of see the results already, so I'm going to go ahead and share it with you. 73% of you have attended one of our programs before. Let's see here. Only 3% have never attended, so we need to change that. Let's see here. Let me share with you the second question. Is this the first time that you have attended one of our sessions about how to listen to an earnings call or what the CEO needs you to know? We do these earnings call labs once a month now. We focus on different companies, different industries every time. And it's a very interesting way to start thinking about how to listen to an earnings call. A lot of people listen with the idea of, hey, what's in this that's good for me, or what's in this that maybe is bad for me, and they kind of tune out the rest of it, maybe even multitask just a little bit. But there's a lot of great information that can be gained from these earnings calls, and whether it's the ones that we do or whether it's your own company, and hopefully what we're talking about today will help you listen to your own company calls just a little bit better. Let's see here. We've got 59%. This is your first time. That's awesome. 31% of you have not attended. Let's see here. No, I attended a session somewhere else. I think it's what the final answer is there. So awesome. I'm glad to have so many newbies here today. So thank you for that. Let me open up one more. When was the last time that you listened to our earnings call? This would probably be your own companies is kind of what we're thinking about here. Was that this year? Was it last year? It's been a while. Never, or I'd rather go to the dentist than listen to an earnings call. I guess I need to open that poll so you can answer these questions here. So what do you think? Listen to your own company's earnings call this year, last year, been a while, never, or I'd rather go to the dentist than listen to an earnings call. This is fantastic. Again, we've got a lot of people who have listened to your company's earnings calls. There's a couple of statistics that I'm going to share with you here in just a little bit. We've got 66% of the people that have joined us today that have listened to their earnings call this year. We've got several people, 11%, who listened to an earnings call last year. We do have people on the line who would rather go to the dentist than listen to an earnings call. So thank you for joining me here today. I take that as a real honor. And some of you have never listened to earnings calls. So hopefully this will encourage you to listen to those earnings calls as well. There's one statistic that I want to share with you. Only about 10% of employees actually listen to a company's earnings call, to their company's earnings calls. And if there's one thing that your CEO would probably love for you to do more of, and that's listen to their earnings calls. It's a great way to learn about the strategy of the organization. It's a great way to learn what's going on with the company. And we kind of feel like there's some to-dos that we can come out of these earnings calls with as well. So listen with that listening ear there. 95% of employees don't understand their company's strategy. What better way to figure out the company strategy than to listen to the earnings calls? 90% of employees don't understand their company's important business metrics. If we don't understand those important metrics, how in the world are we ever going to help change the financial success of the organization? We all can, no matter what position we are in a company, we all can have some impact there. So we're talking about Disney today. Bob Chapek is the CEO of Disney. Now, let's think about you being the CEO for just a second. Just a couple of interesting tidbits about Disney. Founded October 16th, 1923. So they've been around almost 100 years now. 1 year shy at this point. I never knew this. The actors who played Mickey and Minnie Mouse were actually married. So that's kind of cool. It is not a small world after all. All of you know the song, It's a Small World. I'm not going to sing it. No, not after all. But Disney World Orlando takes up about 50 square miles, which is also about the size of San Francisco. So it is not necessarily a small world after all. And I mentioned Disney owns over 200 companies, many of which you're familiar with: Marvel, Hulu, Pixar, Fox Entertainment, Fox Sports, National Geographic, ABC, ESPN. They've got a big map of all the different companies that they've either acquired or started over the years, and it's such a huge map. It's hard to take it all in at one time, but just a huge company. Thinking about Bob Chapek as the CEO, what do your employees need to know? Or what do you need your employees to know? So that's important information for an earnings call. What do your customers need to know? Right? So Disney was basically shut down during the pandemic, and so the customers couldn't go to Disney during that particular time. So they need to know what's the latest. Things have changed a little bit. What do your shareholders need to know? Maybe what do your future shareholders need to know? We want to hang on to those shareholders. We want to get more shareholders in. So we always want to encourage our shareholders to understand what's going on. What do you need your partners to know as well? So that's what we're going to cover in today's call. Here's kind of a promise for you, if you will, a guarantee, a promise, however you may want to think about this. But let me encourage you to attend multiple earnings call labs that we produce. If you will do that with us 2, 3, 4, multiple times, maybe even more than that, you're going to become an expert at listening to these earnings calls, and you're going to understand them a lot better. You're going to have better conversations in your own organization, up and down. People are going to notice that you've got it. You've got business acumen, or financial acumen, we call it sometimes as well. But that will help you build your credibility. It helps you build your career, and it helps you build your company as well. So if you want to go places in your company, listen to the earnings calls and understand how we do these. We're going to give you a process and a form, if you will, to help you listen to these earnings calls. We've got 3 steps we're going to teach you today. Number 1 is prepare. Number 2 is analyze. And number 3 is apply. So let's think about the preparation phase just a little bit. There's basically 2 parts to every single earnings call. There's the prepared remarks, and that is exactly what it sounds like. Yes, the executives do prepare their comments before they get on the earnings call. Nobody is doing that call spontaneously until maybe they get to the second part of this earnings calls, which is the question and answer session as well. Now, I will tell you, just from my conversations with different companies and executives of those companies, they prepare their remarks and then they practice for the question and answers from the analysts that are attending the call as well. There's usually somewhere between about 4 and, I don't know, I've probably seen as many as 20 analysts on a call at times. But there's usually not a question asked that they don't know the answer to already. So number 1 is prepared remarks. That usually takes about 20 minutes or so, maybe 25 or 30. And then the question and answer section usually takes up another 30 to 40 minutes, all depending on the executive comments. So those are the 2 different sections of an earnings call. Usually it takes about an hour. Every once in a while, it might run over just a little bit. So locate the call or the transcript is number 1 on preparing for the call. So a lot of times if we listen to the original call, that transcript may not be out just yet. So a lot of times we'll take notes. So sometimes it's easier to listen to the earnings call after the earnings call. Yeah, it's recorded. Here's the investor relations website. This is how you find the information. I usually just type in company name and IR or investor relations, and it'll take you to where you can find all of that information. So here's kind of where it starts at. Here's, if you scroll down, this is where it goes to. And right here, you can see Disney's Q3 fiscal year 2022 earnings results webcast. Now, Disney's Q3 basically ended at the beginning of July or end of June. So they're on a different fiscal year than on a calendar year. And then also, if you want to plan for Disney in the future, you can see coming up November 8th, their full year earnings results webcast as well. So that's where you can find all that information. So if you click on one of these here, it'll actually take you here. Disney's Q3 fiscal year 22 earnings results webcast. So you can listen to the webcast here after it's during live, I should say, and then you can also come back and listen to it afterwards as well. And here's all the information you might need. Now, not all companies provide the transcript on their website, but a lot of them do. And then there's also the press release and different information that you might be interested in as well. Now, if you can't find the information you're looking for, there's other places you can go to as well. Seeking Alpha is one of our favorite websites. Some of you may have used that before. I basically just did a search for the Walt Disney Company Seeking Alpha, and this is where it brought me to. And so you can see lots of information you can get here as well. You can find the transcript on Seeking Alpha. You can find the SEC filings. Now, that's Securities and Exchange Commission. There's two filings we're really most interested in. That's the 10Q and the 10K. 10Q on a quarterly basis, 10Q on an annual basis. You also get stock reports, stock numbers, what's the stock price for the company. You can see dividends, earnings, financials, ratings, all kinds of different things that you can find here. All right, so that's locate the call or the transcript. Review your notes from past calls. Wait a minute, Kelvin, what are you talking about? Review your notes from past calls. I haven't, I just told you, I haven't ever listened to a call. Even if I have, I didn't really take notes. Well, we're going to show you how you can take notes on those calls. And so it's helpful sometimes to see what those notes are. One of my favorites, we do these for some of our customers as well. And there was an analyst who asked a question during one of the calls. And I was so proud of one of the participants on the call that I shouldn't say one of the executive participants, but some of the participants who have started listening to earnings calls, they knew the answer. And I'm kind of surprised the analyst didn't know the answer to that question. But reviewing your notes can certainly help as well. And then finally, meet with your team. It's a lot of times it's helpful to do this as a group as opposed to just doing it individually. That way you can compare notes, you can kind of see what they're thinking, and you can start talking about, hey, what to-dos should we take from this call? And how should we respond as a result of this particular call? So meet with your team. It's great. So prepare, analyze, and apply. We're going to get to the analyze section here in just a second, but I want to do a brief review of these 5 drivers. And those of you who have attended our classes before, I'm going to ask for a little bit of your help here as well. These are the 5 drivers. Basically what we're doing when we do our building business acumen classes or focusing on these earnings call labs is we're looking at a company through the lens of these 5 business drivers. We've figured out all successful companies focus on cash, profit, assets, growth, and people. Why these 5? Well, as you can see, 3 of these are tied directly to the financial statements. The statement of cash flows, the income statement, and the balance sheet. I haven't met a CEO yet who wasn't interested in growth, or probably more importantly, a shareholder. And of course, it takes people to make it all happen. So these 5 drivers are important. Now, those of you who have attended our class before, fill in the blank for me. Cash is what? Or even my buddy Keith knows this. We were talking about this last night. He knows the answer to this one as well. Yeah, cash is king. We have got to have cash as an organization. If we run out of cash, we are in severe trouble. Cash is king. That's exactly right. So 2 of the main things we look at in the cash driver is our cash position and our cash flow. Oh, there you go. Karen says cash is our oxygen supply as well. That's right. What happens when we run out of oxygen? We die, right? What happens when a company runs out of cash? The company dies as well. Sometimes they reorganize, but most times it's not a good situation. And then tell me this one real quick too, those of you who have attended before. Which one is more important for a mature company? Is it cash position or is it cash flow? What do you think? Cash position or cash flow? There you go. Cash flow. Yep. Most mature companies are going to be more interested in cash flow than cash position. A good answer for all complex financial questions, though, you all probably remember this as well, but I'm just going to go ahead and blurt it out. It depends. There you go. David actually beat me to it. It depends, and it's complicated. That's a great answer for any complex financial question that you might ever get. There are times when cash position becomes more important for companies, even mature companies, than cash flow. In terms of profit, most companies look at primarily three different profit metrics: gross profit or gross margin, operating income or operating margin, and then net income or net margin. Okay, so those are three different levels on our income statement and different measurements that companies like to look at and see how they're doing along those lines. A couple of different profit metrics as well that you're familiar with. Earnings per share is certainly a profit metric. EBITDA falls into that profit definition as well. And a lot of companies focus on EBITDA also. In terms of assets, we try to balance out our asset strength versus asset utilization. All right, so a lot of times asset strength refers to how much cash do we have or how much cash are we going to generate to help us cover all of our expenses that we've got. It also refers a lot to our assets as well, our equipment, vehicles, brands, whatever the case may be. And then the other question becomes, how well do we use those assets? Okay, growth, we talk about a couple of different things. We talk about organic growth versus inorganic growth. Organic tends to be slower but cheaper. Inorganic tends to be quicker but more costly. And there's certainly benefits and possibly negative sides of either one of those. And then people, help me out again here in the chat box if you would. Who are the two primary people that we think about when we think about the people driver and success for our organization? Who are those people? There you go, Jeff. Thank you. Yeah, employees. Thanks, Justin. Employees and customers. Exactly right. Lots of other people, regulators, shareholders, families, yeah, you name it. There's a ton of people that help us out there. So those are our 5 drivers. We're gonna start getting into our exercise now. And you'll see this, the first thing we're going to do is what we call an executive alignment activity. So this is really, there's a couple of things associated with this. Number one is, how do our executives think about these 5 business drivers? Now, I've taught a lot of classes, and I've had a couple of CEOs in the class or walk into the class and hear what we're talking about. But I'll tell you, most CEOs have not taken our class, but they talk about every one of these 5 drivers. Now, you'll notice in our exercise here, or in our workbook, I should say, which we'll make available to you a little later on, we have a definition for our driver. And you can see cash position is the balance in a company's bank accounts, cash on hand, and or cash and cash equivalents, such as certificates of deposit, et cetera, et cetera, et cetera. And then we also have examples of cash. So when we read this material, they may not say the specific words cash, profit, assets, growth, and people. So other words that we might want to be familiar with or think of: dividends or distributions, stock buybacks, debt, issuing stock, capital expenditures. We have 15 different examples listed here under our cash driver as potential words that they might use for cash as opposed to the specific word cash. Same thing is true with profit, assets, growth, and people. We've got the definition and we've got examples of those, so we want to be mindful of those. And then finally, we've got 4 questions associated with that executive alignment activity. Which drivers seem to get the most attention and why? We won't always agree 100% on which driver, but usually the top 2 or 3 have a tendency to float to the top. What were the 2 or 3 main points the executives were trying to make? We'll uncover those here in just a second. What are the goals, trends, and objectives going forward? And finally, what key questions or concerns were raised by the analyst community? It's interesting. We'll take a look at those questions. And a lot of those questions for Disney were focused around the people driver. Now, there was other drivers we might be able to associate with that, but a lot of them were associated with the people driver. So we're gonna practice just a little bit. I want your help here. All right, this is a statement that Bob Chapek made in the quarterly earnings calls. Now, I've got a part of this highlighted. Let me just read this out loud, and then I want you to tell me which drivers you think are associated with this particular statement. So Bob says, we had an excellent quarter powered by world-class storytelling, outstanding performance at our domestic theme parks, increases in live sports viewership across our linear channels and ESPN Plus. So what drivers do you think might be associated with that? I tell you, I kind of crack up at this world-class storytelling. A lot of companies, if they were telling us stories, we might think it was a lie. But we know Disney is all about storytelling and movies and shows and things like that. Let's see, we've got people, people and assets, growth, people, growth. Yeah. So let's see here. We, is certainly people at Disney. Outstanding performance at our domestic theme parks. I like that for assets. Increases is growth, exactly. In our live sports viewership, who is viewership? That tends to be people as well, and across our linear channels and ESPN Plus. Brands and certainly that qualifies as assets as well. They benefited from revenge travelers. Yeah, they've. I tell you what, I've got some statistics. They benefited from a lot of other shows as well, movies and shows also. Yeah, I'm sorry, I do remember seeing that in the information, but I've not seen that. Now let's take a look at this second part of the statement. He says, in significant subscriber growth at our streaming services, which added 15.5 million subscriptions in the quarter. As of the close of Q3, we now have 221 million total subscriptions across our streaming services. What drivers do you see highlighted there? Growth and profit for sure. Absolutely. Absolutely. Any others? Growth. Yeah, we got an easy one here, right? Growth. That's a pretty good indicator for growth. We added. That's another good indicator for growth as well. Yeah, people. People are the subscribers, right? And the more subscribers we have, the more profit that we make at Disney. So yeah, certainly, I think you're right. People, profit, growth. And we could even suggest that streaming services could be assets also. Let me give you one more. I'm going to let you just read this. Well, I'll read it out loud, but then we'll just tackle the whole statement that she makes here. This is Christine McCarthy. She's Senior VP and CFO at Disney. She says demand at our domestic parks continues to exceed expectations, with attendance on many days tracking ahead of 2019 levels. Oh, that's interesting. Not 20 or 21 levels. She's going back to 2019. And our continued focus on improving the guest experience through the use of our reservation system to purposefully manage capacity versus simply increasing volume has the added benefit of improving yield and optimizing overall economics. What do you think? What drivers do you see there? Yeah, growth for sure. Lots of growth. That's right. People and growth all through it. Absolutely. Profit, cash, and assets. I would agree with that as well. We're not going to go into great detail on that, but yeah, you bet. Exceeding expectations, tracking ahead of 2019 levels. The reason they're tracking ahead of 2019 levels was 2020 levels were horrible. 2021 making a comeback. 2022 is doing even better. So we'll explore that a little bit also. Now, I did the heavy lifting for you on this one, reading through the earnings call transcript. I like to kind of split these up into two different sections. The first section is for the executives' comments. All right, so the executives had 13 comments around cash. The analysts and the responses to those questions had 13 comments or questions around cash as well. 22 and 17, 41 and 18, you can see, whoops, sorry about that. Let me get that back up. Try to get that back up. I just increased it more. Sorry about that. That will go back up just a second. There we go. You can see here that assets actually had the largest number of comments, which doesn't happen often. Usually, a lot of times it'll be around growth or profit. But assets was number one in terms of my reading and my calculations. You can see that people wasn't far behind at 50, and then profit was at 39. So we're going to kind of focus on those three as we go through this exercise today. Now, you're not expected to read this, don't worry, but this is kind of a compilation of all of my comments that we'll focus on now. So the first question, if you remember in our workbook, our executive alignment exercise was, which business drivers seem to get the most attention and why? So I mentioned assets, people, and profit. So around assets, their brands. They talked a lot about their brands. Theme parks, ESPN Plus, streaming services, Disney, Marvel, Star Wars, Hulu, Pixar Sports, etc. Pixar Sports and etc. Lots of different brands that they talk about throughout this entire call. Sports. Disney does a lot of sports, responsible for 47% of sports hours watched by the 18 to 49 demographic in Q3. 47% of sports hours that were available to be watched were done on Disney channels or brands. Yeah, absolutely. I wouldn't put that in here if they didn't do it. Yeah, I actually looked at the map of all of the different companies. They own ESPN as well. They own a lot of competing news networks, and so they kind of control the news to a large degree. It's possible to say. Two movies alone earned. One of them earned about $1 billion at the box office. Another one earned 0.7 billion. I'm glad you learned something, Jeff. Hopefully you learn a little bit more as well. Theme parks, all of them are now open around the world. It took a while to get all of those back open. And then they just released their first new cruise ship called Disney Wish. And they got two more coming out here before long also. Just another little note, powered by liquefied natural gas, as they put it. It's the cleanest burning fuels available. So those are just some of the comments around assets in the call. People, not surprised that people were second greatest, maybe almost surprised that they weren't the first greatest number. But a couple of quotes, specific quotes. Everything we do in our parks is all about improving the guest experience, including limiting capacity and personalizing those experiences. Last time I went to Disney, you could walk up to the ticket gate, you could buy tickets, you could enter the park that you wanted to go into, and you're in. You could, a lot of times you could even buy the fast pass at that particular time. Now you got to make reservations to go to Disney. So it is certainly different, and they can limit capacity, which they did certainly coming out of COVID. But they've also got a tremendous reservation system now that they can kind of flex that capacity a little bit, all depending on how things are going. If they've got a slow day, they can kind of do some things to make it a little better. We continue to bring back more of the great experiences that our guests love. Most of the time they had guests capitalized, and so they have a tendency to call their customers guests, and I learned that. Our cruise ships deliver one of the highest rate of guest experiences across all of our parks and experiences offerings. Yes, they do call it experiences offerings. International visits were non-existent during COVID, but they have come back quite a bit, but still below the traditional range of 17 to 20%. Now, I'm gonna let's see here. Sorry, I was thinking I had another comment down here around profit about the international visitors, but that will come later on. In terms of profit, we continue to focus on expansion and long-term profitability by being disciplined in our acquisition approach. Certainly done a lot of acquisitions, and but being careful about those right now. But focused on that long-term profitability. Their profit margins have gone down. Before COVID, they were up in the 15 to 20% range. We'll see what their margins are now here shortly. Q3 revenue up about $3 billion and operating income up by $1.8 billion. Thanks, Crystal. I appreciate that. 2019. Some interesting statistics around 2019, other statistics as well. That was actually the last time that they paid a dividend. They stopped paying dividends after 2019 during COVID when companies were being careful with their cash or conservative with their cash. A lot of times that can really kill a company. It doesn't seem to have affected Disney coming out of the pandemic. Let's see, canceled cruise trips were issued vouchers but had only 12 months using. Probably has contributed to attendance and volume. Yeah, great point. Let's see, competitive position in cruise business, especially the family cruise market. Here's the comment. We generate pricing well above the industry average, so certainly very profitable on the cruise business there. So certainly applies to profit. So what were the two? Those were the three drivers that they talked about the most. They talked about all of them, but those got the most attention. What were two or three main points the executives were trying to make? And one of the biggest ones that I noticed was their comparisons to 2019. As a lot of companies are doing, quite honestly, because certainly 2020 was a strange year. 2021 was coming back out of that strange year and still had a little bit of strangeness to it, if you will. But per capita spending at domestic parks increased 10% versus Q3 of last year and over 40% versus fiscal 2019. So making some improvements over the last normalcy. Also, Q3 occupancy at hotels was 90%. Pretty incredible right there. Demand at our domestic parks continues to exceed expectations, with attendance on many days tracking ahead of 2019 levels. Average daily attendance for the first 3 quarters was slightly below 2019, but significantly higher revenue and operating income over that same period. So in our classes, we talk about how do you increase profit? Well, you either increase revenue and you can either sell more or you can increase prices or you can reduce expenses. So they've probably had a little price increase coming out of 2019. People are responsible for creating the wow factor, which Disney does best. Absolutely. And then Disneyland Paris revenue and operating income exceeded 2019 levels as well. I believe they were a little bit later to open up than a lot of other places also. The other thing that they talked a lot about was subscriptions. Who knows? Some of you may have a subscription to one of their streaming services as well. I started streaming probably a couple of years ago, ESPN Plus, and so I'd be curious if anybody else is streaming one of the Disney streaming services as well. Disney Plus, yeah, I bet a lot of people, especially with kids, have that Disney Plus. Let's see here. Once they purchased all those Star Wars stuff, I was in. Awesome. Does seem to be investor concern that 2023 park attendance will level off or drop as the revenge traveling come to an end and the economy continues to drag on spending. Is this a driver for the lower stock price? Could very well be, Jeff. Matter of fact, they made a comment that they do anticipate Disney Plus being profitable by 2024. There was a ton of spend that went into that Disney Plus streaming service. And that certainly and there's been a lot of investment in streaming services altogether. And then also just getting back up to speed. And so, yeah, there is definitely some concern about the pending potential recession and what that could do. But at the same time, they've said that their resiliency is just incredible right now. And the people, how much they're willing to how they want to come to the parks and how much they're willing to spend once they get there. Let's see here, just a couple of other things. Streaming services added over 15 million subscriptions in Q3. At close of Q3, Disney now has 221 million total subscriptions. Disney Plus ended the quarter with more than 152 million global paid subscribers, a net addition of more than 14 million subscriptions versus Q2. Just versus Q2. Hulu added more than 600,000 subs. Got to learn the language here. Added 600,000 subscriptions, which is kind of how they talk. Now has 46.2 million paid subscribers as well. ESPN in a Q3 with 22.8 million subscribers. Hulu ad-supported tier. This is interesting. Hulu ad-supported tier has ad-supported. Okay. Thank you, Jeff. I appreciate that. Hulu ad-supported tier has more subscribers than ad-free tier. So 2/3 to 1/3. People are willing to pay less, even if it's got ads in there on Hulu. And then this was an interesting comment as well. All of these streaming services were launched at compelling price points across all platforms. As they said, best value in streaming. They believe they have the best value in streaming. They've continued to invest in the content. Because of the increase in investment relative to a very good price point, as they say, they've got plenty of room on price value without meaningful churn. In other words, are they going to lose business because they're increasing prices? They basically referred back to the ESPN Plus increase. It went from $6.99 to $9.99 a month, and said basically we saw no change in subscribers as a result of that increase. And so kind of interesting how the value, people are willing to pay that extra price there. All right, so what are the goals, trends, and objectives moving forward? This quote came straight out of the earnings call. I love it when they make these some of these questions easy. Let me go back up here and make sure I didn't miss a couple of comments or questions. Meg says Disney Plus subscription is pretty low compared to other services, half what I pay for Netflix. We're actually going to compare Disney to Netflix on the financial statements here shortly. I wonder if they're going to implement big price increases there to make it profitable. I think you'll see the prices going up. Basically, what I heard in this call was that they're doing some price increases, but certainly by 2024, they're talking about Disney Plus being profitable. So it will be interesting to watch that and see. Several highly anticipated attractions set to open 2023 that should continue to drive attendance in Disney. Yeah, good point. Thanks, Crystal. Ad tier speculated this fiscal year. Thanks, Crystal. Awesome. So going forward, the Walt Disney Company's incredible employees, cast members, and creative teams will continue to transform entertainment by combining extraordinary storytelling with innovative technology to create an even larger, more connected and magical Disney universe for families and fans around the world. I probably shouldn't tell this story, but I'm going to anyway. They talk about cast members. A few years ago, before the pandemic, I was doing some work in Disney. We had meetings down there. It wasn't Disney associated, but I was certainly on property. Had a little time to go play around the golf after I was done, so I went out to the golf course and they said, "Are you a cast member?" And I said, "Why do I get the impression the answer to this question should be yes?" And they said, "Well, if you're not a cast member, it's $75. If you are a cast member, it's $25." I said, "Hey, just call me Goofy," and got away with it. So I played for 25 as opposed to 75. So just a little tip there. So if they ask if you're a cast member, you might want to say yes. Improve the guest experience through the use of their reservation system to manage capacity versus simply increasing volume. Okay, so improve the guest experience through the reservation system. Increase core Disney Plus subscriptions to 135 to 165 million by end of fiscal 2024. That seems like a pretty reasonable goal. I think we said just a second ago they're at about 150 million subscribers already. So they certainly ought to be able to make that goal. Disney Wish is the first of 3 new ships and hope to have something to announce in the future in terms of sports betting. They talked about the under 30 demographic, and certainly that the under 30 want some kind of sports betting available to them, and so they're hoping to have some kind of announcement soon. Be interesting to see what happens there. So what were some of the questions or concerns raised by the analyst community? Yeah, that'd be interesting to see Mickey setting the point spreads, wouldn't it? Yeah, that could be a lot of fun. So I'm not going to go through each one of these questions, but certainly you can see there was 9 or 10 questions that I highlighted. What I thought was interesting that was basically about questions number 1 through 6 in particular was talking about a lot it had to do with it about the customer, pent-up demand, streaming customer base. What are you seeing from international visitations, subscriptions with and without ads, sensitivities with what the customer is seeing. So a lot of questions about the customers, the guests, I guess I should say, and certainly they focused around that. In terms of pent-up demand, they basically said, yeah, we've solved a lot of pent-up demand and we're well positioned now for growth. Let's see here. Research on streaming customer base that informs you to take the price increases. Talked about that just a second ago with ESPN Plus and no churn. Let's see here. DPEP margins. Disney Parks and Experiences products. Margins were spectacular. What are you seeing from international visitations? It's lower than it was before the pandemic, but it's coming back and still a little lower than what it was prior to. Curious about the answer number 2. How high can they go? I don't know I don't know the answer to that one, and I'm not sure that they specifically said something about that. But when they start seeing the churn, I think might answer that question a little bit more. Yeah, there you go. DraftKings. Thank you, Mike. Appreciate that. Let's see here. Some of the other ones. Number 6, sensitivity is what the customer is seeing. Let's see. Well positioned in face of a potential recession. Okay, and again, this goes back to the resiliency we just talked about. And then heavy working capital use. So they did get in a question about cash, and they basically said that that was coming out of the pandemic, that yes, they have put a lot of cash into the business, and that by the end of this year and into early next year, that working capital will start looking a little bit better. I thought this was an interesting question. Direct to consumer, DTC, and Disney Plus costs. They talked a lot about the cost for those two, and the operating income losses peak. I've never heard it referred to as income losses peak. When are the income losses going to peak? And they said that that should be coming to a head pretty soon. But then again, it goes back to Disney Plus should be profitable by 2024. So still a year and a half away or so. So those were some of the questions from the analyst. Let me share with you, this is basically the last part of our workbook. This is navigating the financials, or an NTF, as we call it for short. And basically, this is a way to help you remember some of the important metrics. Now, this is our generic form, if you will. So we've put some of the most common metrics that companies focus on. As we do our classes, we customize these so that we're focusing on the specific metrics that are important to those particular companies. And they vary to a large degree. So you'll notice over here our cash, profit, assets, and growth. 4 out of our 5 drivers, and of course it takes people to make it all happen. If we look at our first column here, it's key metrics and equations. So a couple of these, actually the first 4 do not have any equations, but then you get into equations in number 5 and on down. So we try to give you the metric itself, okay, just as an example, net profit margin. Then we give you the line items to focus on as you look into the financial statement. So the 2 line items you'd look for would be net income and total revenue. Then the next column, we tell you which one of the financial statements you can find that on. All right, is it the income statement, the balance sheet, or the cash flow statement? For cash, it's on the balance sheet. For net profit margin, you can find both of those numbers on the income statement. You can see on return on assets, we actually have to look at 2 different numbers here. So help me out here just a little bit. We're going to talk about cash and cash equivalents. We find that on the balance sheet. So we're going to look at the balance sheet real quick. Hopefully that's not too small for you to see. Take a look here. Tell me, here's cash and cash equivalents. How much did Disney have in cash and cash equivalents on July the 2nd into their 3rd quarter, 2022? Yeah, 12,959. $12,959,000,000. These numbers are in millions. We've got to add 6 zeros to these numbers to make them actual numbers. Yeah, 12,959,000,000. So we put that right in here as our first answer. We're going to take a look at cash flow also, cash from operations. That's in our cash flow statement. So let's take a look at that. Now I'm gonna let you look here. We've basically got 3 sections: operating activities, investing activities, and financing activities. Let me go back just a second. We're looking for cash from operations. So let's take a look at cash from operations. And it's a little different. So we kind of put the generic name in there. I'm going to help you out a little bit on this one. Cash provided by operations. All right, cash provided by operations. There you go. Thanks, Samuel. Yeah, 3,478,000,000, up a little bit from the previous year at 2.9 billion. All right, so 3.4 billion dollars. Total revenue. We're going to find that on the income statement. We're looking for total revenue. Now, a lot of times you'll see revenue highlighted by only one line. They actually break it out between services and products to give us a total revenue. So you may have heard the term top line before. Well, the top line is our revenue. All right. So, but if we've got multiple ways that we recognize revenue, our top line would actually be on this third line here where it says total revenues. We've got $21.5 billion. Thank you all, Jeff, for that. 21.5 billion. And then finally, net income. Where do we find net income? Right down here, net income attributable to Disney. So all of our expenses in between our total revenue and net income, 1409 exactly, 1,409,000,000. Now, at this point, I'm going to go ahead and fill it in, but you've got a lot of these. You can see net profit margin. I could fill in this 1409 right here, and then total revenue right here. So I've already got those numbers. I don't have to go back and look at the financial statements again. And there's several other places. Right here I need net income. Right here I need net income. So we can do that as well. So you can see here a net profit margin for Disney Q3 2022. This is just for the quarter alone, about 6.5%. I mentioned they were over 15% prior to the pandemic. We've got the equity ratio, return on assets. You can see they had some tremendous growth here in revenue, net income, and earnings per share growth. And this is a great example of operating leverage as well. If your revenue is growing, it's not uncommon to see your expenses grow as well. But if you can grow your expenses slower than your revenues, then you're going to come out with a better net income growth number than either one of those numbers. All right, so you can grow your expenses, just grow them slower than your revenues. So 53% here. And here you can see the numbers for 2021 as well. Doesn't look good for 2020. That's the net income in 2020, negative $4.7 billion and negative 2.61 in terms of earnings per share there. Let's see here, 5.4. They did increase their profit margin a little bit in 22 compared to 2021. Let me share with you year-to-date numbers. Let's see, being able to plug in the numbers like this is incredibly helpful to understand. Thank you. You are very welcome, Jeff. And yeah, a lot of our attendees to our class love this sheet because it helps them remember the important metrics and it shows them or reminds them of how to calculate these particular numbers and where to find those numbers. So that certainly helps. Year to date, you can see our cash was down just a little bit, but we've been investing more. Disney. You can see our cash flow was actually a little greater. Revenue was up. Net profit margin 4.8 for the year to date so far. And you can see here that we've continued pretty good growth throughout the year to date so far as well. And a little bit of, well, you can see here what happened in 2021 year to date as well. Now, here's Disney compared to Netflix, which was the company that we highlighted last time we did this, last month. So you can see Disney has about twice as much cash. They've got a little more cash flow. Their revenues are almost 3 times that of Netflix in the same time period. Net income, slightly less than Netflix during that time frame. Net profit margin, tremendously greater for Netflix over Disney during that time frame. Now, what we see here, though, is tremendous growth rates. So while Disney grew during that time frame, Netflix, I'm sorry, grew in terms of revenue, but their net income was actually down and their earnings per share was down year over year. So that's the navigating the financials. I want to make sure we get through here today. Somebody, your mom maybe, said to know and not to do is not to know. So if we know, but we don't take action on it or apply the knowledge that we've just achieved, really, it doesn't really matter if we know the information or not. We've worked with 32 out of the Fortune 50 companies. I did have it as 30. We've added a couple since the last time I did one of these calls. Here are some of the results that those companies have seen. I'm not going to go through each and every one of these, but basically 84% improved the performance of their business or their particular role. Increased collaboration, improved upward communications. How would you like to talk to your boss more about income statements and cash flow statements and balance sheets? And hey, our profit metrics were up last time versus last year. Your boss would appreciate that, I assure you. Improved teamwork, increased business focus. Improved employee engagement. I think I said I wasn't going to go through all of those, and I just went through all of those. So lots of different benefits coming out of that. So now we're going to apply. Here's some of my insights on Disney. Amassed over 200 companies, a lot of those through acquisitions. Heavily impacted during the pandemic through its parks, hotels, and resorts. They did have a lot of business that carried on as well, but certainly had impacted their revenue and their profitability as well. Fiscal year 2022 is getting Disney back to pre-pandemic levels, thus the comparison to 2019. Disney has created a tremendous network of streaming services with enormous subscription levels and growing. It appears their investment in these services will allow subscription increases with very little churn. Finally, here's a statistic I kind of alluded to a little bit earlier. It's amazing the number of Disney productions that are created by Disney and the awards they're nominated for just in fiscal 2022. These were highlighted in the prepared remarks. 147 Primetime Emmy Award nominations, 47 different shows receiving nominations, and 71 news and documentary nominations. A lot of storytelling, if you will, through Disney. So those were some of my inserts. Now, based on what you learned, based on what I learned, what are 3 actions you'll take? I've been looking forward to this comment for the entire hour that we've been on. I mean, how many of you watch the Super Bowl every year? And what's the question that they ask everybody for the MVP of the game? What are you going to do now? Well, this is kind of like my question. Based on what I've learned, what am I going to do now? I'm going to Disney. I couldn't wait for that. Number 2, I'm going to use my ESPN Plus app more. I need to get my increase in price value out of that. And then on a more serious note, I'm going to continue following Disney's results on a quarterly basis using this workbook as well. I want to encourage you all to download that workbook also. I'm going to give you the link for it here in just a second. I'm going to challenge you to review a company. It may be your own company. If you're in sales, this is great to do with your customers or partners. Or maybe it's a benchmark company, somebody in the same industry as you, or maybe it's just a company that you're interested in. So I'm going to challenge you with that in just a second. But if you analyze your own company, let me encourage you to analyze your own company and then have a conversation with your manager and make sure that your priorities are kind of headed in the right direction. If you analyze the customer or partner, meet with your sales manager and talk about how we may be able to help that customer with their cash, profit, assets, growth, and people. Or maybe if you analyzed a competitor or benchmark company, meet with your manager and compare the businesses and are there some actions that you could take to be more competitive or innovative. So we've prepared, we've analyzed, we've applied. The three things you need to do: locate the caller transcript, review your notes from past calls. Now you've got notes from your past calls. Meet with your teams to have one of these. Now, I think I've got one more question here. There we go. Who are you going to analyze? Is it going to be the company you work for, a company you sell to, a company you partner with? Who are you going to sell to or analyze, I should say? Looks like most of you are going to analyze the company that you work for. That's about 53%. We've got about 27% of you want to review a company you want to invest in, and then about 6% of you a company you're interested in. And then next month's webinar, Boeing. Awesome, awesome. So let me close that, and let me share with you also. So there we go. All right, so take a look at acumenlearning.com/webinar. We've got those highlighted in the chat box for you as well, links to download the workbook so that you can research some of those companies. While you're in there, we have an online building business acumen learning platform. We'll give you $100 off if you want to do something individually. If this maybe sparked your interest just a little bit for doing some things in your own company, let us know. We'd love to talk to you. And then finally, we will be highlighting Boeing coming up on November the 16th. I don't know how many I've got from my team here. I know there's a couple of us besides me. We're going to stay on the call as long as there's people who are still on here, may have some questions. Any questions about what we've just talked about? Any questions about Acumen Learning or anything else that we might be able to answer for you? Feel free to put that in the chat box, and happy to answer those questions for you. Thanks, Jeff. I appreciate it. Thank you, Karen. Thanks, Rajiv. You bet. Thanks, Samuel. Excellent. Thanks, Karen. Thank you, Jessica. All right, I'm going to butcher it, but I'm going to try it. Aluse. Let's see here. Very welcome, Siva. Thanks, Armin. All right, thanks, Jill. Thanks, Mike. Thanks, Elizabeth, Nevi, Rebecca, Sriram. Thank you. Excellent. Saranga. John, thanks, Charvel. Excellent, excellent. Thank you all. Any questions from anybody? Thanks, Renata. Thanks, Greg. I had a lot of fun doing this today. Thank you all for your interaction today and engagement. That always makes it so much better.